Hey, welcome everyone. We have a special visitor in the office today. It's the company mascot. This is Casey, aka Puppycita. She's our little Ruby Cavalier King Charles, and we call her Puppycita. She's a puppy, and Cita, because in Spanish, Cita, you throw Cita on anything, it means small. So she's a small little puppy dog, my Spanglish. Puppycita. So Puppycita, we'll put you right there. Puppycita missed us while we were in Italy last week, and I think I've given you guys a couple insights as to what was going on with my observations, especially in the pots sector. TLRY today is taking a upside move. TLRY today up 5.69%. TLRY, I told you about the pot sector, and again, global dominance of production. When people in the norm start to see calming effects from a dermatology perspective, topical creams for arthritic sufferers, and when you have that for the aged population that so much loves golf but sucks at it, and again, we're popping Advils, and one thing a lot of people might not know is that a lot of country clubs, believe it or not, in the men's locker room, they have Costco-sized jars of Advil, Aleve, and a nice little pitcher of water so that you can prepare the anti-inflammatory effects of an 18-hole round of golf. So can you imagine lathering up with a pot cream and within an hour and a half? I think the THC content, not CBD oil, the THC content is what my humble opinion is my logic, actually kind of like calms and soothes maybe active nerves that send the pain message to the brain. So you still have the maybe arthritis, the bone on bone, but you just don't feel the pain. So therefore, you're more apt to, do better in your round of golf. Anyway, what's the point I'm trying to make? If more and more people discover the application and it becomes more popular, then the company that produces the high quality pot, the one that has the most substance to be able to replicate and come out with consistent product, is going to win in dominance of market share. And I think TLRY, as a producer, has a leading effect. And there might be others, but I think TLRY, it's been underperforming. It's a stock that I wasn't a big fan of at 88. It wasn't a stock I was a big fan of 54. Go back, look at the YouTube videos that I've done. I said, listen, this stock can probably get into the low 40s. It hit the mid 40s. And now in the last day, we're starting to see some interest because it's oversold. But it's not just TLRY, it's other stock sectors, GWPH. And I'll get into, I want to just kind of focus in on, if you can look at my screen right now, this is my TradeStation application. What you see over here is my Thinkorswim studies with the PPS, with the person's pivots, and then the person market catcher, which is that relative strength phenomenal tool, which, by the way, will be this year at a few of the Money Show Traders Expos. So if you do come in, we'll show you how to properly utilize that tool to determine stages of stock or markets measured against the overall market of relative strength. Outperforming, underperforming, weakening, and lagging. So those four phases of a market helps us to determine whether or not money flow is coming into a trade sector or going out of. So with that same concept that I'm talking about, this is biotech right now. So we take a look at my screen with biotech, and this is the relative strength tool, PMC. It's just numerically and color coded. So the strongest one we have is Esperion. Esperion right here. They came out, a stock we were long, we took profits on. I'm sad I did that because it continues to perform, or at least maintain its value. It had a positive report from FDA on a liver drug, and so Esperion is it's done well. It's in a trading range. Here's the indicator. Here's our volume tool leading up to this W bottom pattern, and you can see the W bottom pattern in a second. Leading up to this W bottom pattern, note that the volume trend was up, and note that the relative strength right into this zone right here, right into that second area. If this is the number 1 point, that's the number 2 point, okay? The W bottom pattern. The technicals were improving, so that was the buy point. And we took a little heat All right, it pulled back and then it exploded. We made some money on the trade. All right, what about moving forward? Well, the relative strength is bright blue. It's still improving. So keep that in mind, bright blue. So notice it says 23.12. How do we look for these types of readings? Well, 23, there it is, Esperion. There's the bright blue, 23.13 number. Okay, it's 12.13. It's, to me, when I see not one stock, not 2, 3, 4, 5, 6, 7, all bright blue, it's telling me that there's money flow coming into beginning. In about less than a week, we saw a lot of the biotechs, and we'll take a look here just to make sure we validate this statement. And the statement is, about a week ago, a lot of the biotech stocks were underperforming. And I mean, underperforming is I guess an understatement. This is Biogen. It crashed. I mean, it just did nothing, right? And so in the last, say, 2 weeks, it's moved sideways. It's underperformed the market. But as the stock market's kind of dipped off its highs, this hasn't gone any lower, so it's showing relative to the overall market, it's outperforming. It's just not going down anymore. It went down already. So Biogen, in this case, volume's kind of okay. It's trending higher, meaning this low is being supportive. When will money come back into that? Probably after the next election or earnings cycle, my guess, or as we get into the summertime biotech conference season. So seasonally speaking, biotech from late May, June, and July have an upside movement, and I think this is where we're starting to see nibbling going on in biotech. Also, take a look at what else right above it is the healthcare sector, drug stocks, and you can see Baxter, everything's bright blue. This means that we have started to see outperformance in some of the drug stocks, Bristol Myers, Pfizer, AbbVie, for example. So relative strength's important, and it shows that they're starting to show accumulation into this space. So we've seen sector rotation, money coming into this space. What are you doing back there? You getting bored? You're jingling. Your collar, you're jingling. Yes, cute as heck, right? All right, next. What I wanted to point out to you guys is this. Department stores, this relative strength, Kohl's, negative 24. It's just bright red. It's ugly. It's been ugly. It's no surprise. Kohl's, when you have a relative strength that's deteriorating, a market tries to rally at the top end of a trading range, and the relative strength's weakening and the volume is weakening like it did, this is not a time to be buying a stock. So that's Kohl's. Now, what I wanted to discuss is we had a positive earnings report from Target, TGT, Target, positive. What's the dynamic difference? Now, Target, I think it's, when you look at the technical indicators, right, it already had a sell-off, so all it did was come back to where it was 2 weeks ago. That's it. Not a big one-day wonder, an upside move. That's great. If you were short at 70, then that hurt. If you were long at 70, well, maybe you made $8. If you bought the stock over here at 80 back in March, you're still underwater. So the point that I'm trying to make is we have to be very stock selective, and this is a trader's market, and one of the trades that's coming up right now is Best Buy. Now, we were long Best Buy, and I just got out of it today. Let's bring up Best Buy real quick. And it's in, let's see, where did I put Best Buy? I might have gotten it off my list. Let me insert blank row and go to Best Buy. And I'll tell you what we did with Best Buy. So Best Buy, relative strength, you'll notice that it's got a red reading. Not too good. So we've been in this stock. We bought the stock on a 60-minute buy. We started to see the relative strength was disimproving. And so I wasn't a real big fan of that occurring. However, when we changed to the weekly charts, look at the weekly relative strength started to outperform the market. So we had a pullback. We bought a pullback in the market. We were long at around 67 and change. We bought that nice little pullback against old support. Hard to see with my bad drawing. But as we got up today near the highs and we started to fail off 70, I said, you know, I'm not a big fan of that volume weakening. And yes, while Best Buy might have sold some good products, it may not have a lot of harm with China tariffs because you can still buy TVs from Japan, Sony. You can still, different electronic parts, components, assemblies, Korea, for example, different products. And again, Apple, what is Best Buy? It's got a great atmosphere to walk in. They've got the Geek Squad. I like Best Buy. I like the model. However, I don't like the way markets react when they may beat top, they could beat the bottom, and they may give poor guidance, and then it's going to get punished, right? So with that said, what did we do? We decided to take a quick 3% profit on the trade, made a couple bucks, hit the road, but then maybe apply, and this is what we did, apply some of those stock profits to an option strategy. We did a ratio back spread for the July expiration, 72.5, 75. To me, if the stock goes up, we got a shot at, if it gets a 5 to 8% move, they're pricing in about a 7% move right now ahead of earnings, which is a $5 move. That puts it back to 75. Let's take a look at where and when was the last time Best Buy was at 75. Best Buy was at 75 at the peak here less than 2 weeks ago. Could it get back up to its old highs, last August summer highs of 82? Yes, it certainly could. Father's Day is coming up. A lot of TVs are sold at Father's Day, and it also is synonymous with the NBA Finals. So a lot of people watch, and particularly dads love big screen TVs on Father's Day, not ties, big screen TVs. So a 70-old inch right there in the man cave, literally pretty good present rather than a tie for Father's Day. Best Buy does some good business, by the way, on Father's Day sales, so maybe they give out some decent guidance. But as it is, it's not a retail apparel store. It's not a department store. I always joke and say Macy's. If you haven't walked into a Macy's lately, go into a Macy's. I mean, it's almost like you're shopping in the 1950s for your great-grandmother. I mean, no offense, right? But I mean, it doesn't have the appeal of I want to go back there, right? I mean, for me personally. So I think department stores have to reevaluate their image, what they do, what they sell, and who they appeal to. And so with that said, consumers are more savvy, we're more price orientated, and whether you buy a polo shirt, and this is a Person's Planet shirt though, but whether you buy a polo shirt for $80 at Macy's in the boutique area of Ralph Lauren, or you buy the same shirt for $40 or $30 at TJ Maxx, it doesn't make sense. So, I mean, if you want a polo shirt, people are value orientated and then therefore can go to Marshall's and go to TJ Maxx instead. So if you're looking for the day in and day out, same stuff that's being sold at Macy's. Anyway, that's just my little rant. I apologize, but I think that we have to be very selective in the retail space. That's the problem that's going on. This is not a market that you can just buy everything. It's very selective, and it's also headline news risk. We've gone from collusion with Trump to now we've got, what's the latest one? Conspiracy theories going on. And so now there's a tit for tat, not just with what's happened with Russia, what's gone on with China, but now there's more conflict going on, causing investor grumpiness, so to speak, which is, you know what? This may cost a little bit of delay in an infrastructure bill because Nancy Pelosi and Chuck Schumer are talking about, there's some cover-up going on. And so Trump's tweet today is not about China. It's about what? I'm not doing anything if they're going to investigate me anymore. So that's kind of putting a hamper in the market. At the end of the day, words, sticks and stones will break your bones, but words will never hurt you to a degree. And until we really see action, the economy's still plugging along. The markets themselves, they're going up and down. It's not important how a market opens. It's how important a market closes. And for me, Best Buy, if it closes greater than this next line in the sand, I hope you like that segue of how I got into this. If it can close greater than what we call a last conditional change resistance, man, I see this stock coming right back up to what? Maybe at the very least 73 to 75. So I'll take a portion of the profit on a stock trade, get out, and apply it to an option and look for continued upside. By the way, Best Buy has strong seasonality between now and July, so that's a good thing. I'm not a big fan of weakening relative strength. I'm not a big fan of the weakening volume trend, so therefore I'm off the trade from the stock perspective, and I'm not going to take overnight hit action. Should I buy a put in this trade? You know, I think with Target and with being selective in the electronics, I don't think so. But you know, I wouldn't. The implied volatility is not high enough to put and implement maybe short strangles, selling an out of the money call and an out of the money put. So I wouldn't want to do that option strategy. So I'm going to play the glass half full, more positive, and say that Best Buy could go to the upside with a defined risk and taking a portion of our profits. All right. So that's where I stand with that. Today, I want to make mention, crude oil, has it topped out? Well, we had a really good setup in the sense that this is the daily pivot, this is a weekly pivot. And so when prices, if the market's truly bullish, we should be trading north or above pivot. And we hadn't. We opened up lower this morning, and then all of a sudden the market started to dribble and trade below weekly pivot. That's a bad sign if you're bullish. More importantly, look at the volume indicator. And I've been giving this out almost every trade, how we utilize this tool to help confirm trades. Now, Andy in our trade room pointed out, hey, nice trade in the Algo. This thing got out of half the position. At the blue line is the profit. Then it on the balance, it had a new trailing stop function here, and it finally liquidated the trade in this case and took a profit. So a wonderful trade on the short side and the scale out function on Algo 17. All right, let me wrap this up because someone had asked, hey, what happened to that Euro trade that the Algo 17 got into yesterday? Let's tee that up for you. All right, yesterday I left you with a couple things. The volume indicator was suggesting there was money flow coming into the trade prior to whatever the announcement, who cares, another headline news, right? Unfortunately, it had gotten long, so nice. It has a defense mechanism that protects anytime it has a profit, it's near a profit target. If the market pulls back, it'll stop out and maintain and take some money off the table. So it missed the upside move. But what did it do? It did a better thing. It went short. And it went short in the market with what? The volume trend was going down. So if you notice, as I can expand this up for you, and this is the review that we wanted to take. The trade yesterday on the Algo optimizer went short where it should have, and it had great confirming. If you notice right here, the bar, this is the one bar, and on the close, so we're comparing an apple to an apple. You can go right down the measuring line here of this timeline right there, and you'll see, oh yeah, it closed lower, and so the moving average component had already crossed over, generates a short, and it gives great confirmation. It's already been in a crossover, so it said go short, and the volume actually supported that short. Yesterday when I shared this trade with you, it was still in an active short. One of the things that it did, it took its profit target. This was the blue line, the intended profit target. It traded 2 ticks below the profit target. Crazy, right? And what did it do? It trailed the stop on the balance. So sometimes if the market just kept on falling, you'd still be in the trade. So what did it do? It had a trailing stop, that's the red bar, and it got out of the trade. That was a conclusion of yesterday's little trade. Now, Euro currency as a day trade vehicle, it kind of stinks. And the reason, for a lack of professional terminology, stinks is because it has a very small 40-point ATR on a 10-day basis. In other words, 40 points is what we normally get. 2 days ago, we had 29 point. Yesterday, we had, or even up to today, was what were we, like 39 point? 39 points in a day. So if you can't sell the high and you can't buy the low and you got to wait for a trend, all you could do is literally, and this is the range yesterday, you can't sell the high, you can't buy the low, and then sometimes the market will be choppy in between. It makes it hard to say, hey, I got this trade down. But I think the Algo Optimizer did its best job with great confirming indicators, and that's what we had running for us yesterday in the live Algo trading room. Today, big trade, and I'm pointing up to another monitor here, was in the Algo Optimizer. Lastly, let's take a look at another market dynamic. And I'm going to light this up. But this is my VIX page. Couple things. I've got TNA over here, which is the leveraged ETF on the Russell. I have the VXX, which ironically, if you're bullish stocks, you want to be bearish volatility. And the VXX is actually short a position. You can see it's short the market right now. So it's got an open trade profit. This is SVXY. This is the inverse of VXX. So let's take a look at the current position SVXY. And again, if you're bullish stocks, then SVXY should go up. Well, this is short. You can see the arrow. And this is actually long. It's not really going anywhere. But here's the irony. Let's expand this chart for you on these trade setups. The SVXY is not making new lows, which would signify that the stock market is rising. All right, so this is an inverse. SVXY is the inverse of the short VIX. In other words, normally you see the VIX go up, which means stocks go down. Well, this is the inverse of that. When this goes down, stocks go down. When this goes up, stocks go up. This allows those in 401k plans to be able to trade a VIX product who can't normally sell short. So if the VIX goes down while stocks go up, you can't sell the VXX. What can you do? Buy SVXY. So the point that I'm trying to make here is that we have a very mixed tale of the tape in the marketplace. Very weird stuff happening. We're not rallying. We're not falling. It's still middle of the day. It's 12:41 here, Eastern Standard Time. It's not important how a market opens. It's how a market closes. We've had some really disastrous, what would normally be disastrous headline news. Trump's not going to do a deal with infrastructure. China deal's off the table. They're saying that we reneged on things. Steve Mnuchin was out on CNBC earlier today. We've got the Fed talking about inflation. We got the minutes of the FOMC. And yet the stock market, here it is. It's still not crashing. So to me, this is still a glass half full, a glass half empty market. We need to be selective, and you need to be short-term nature and take profits when the market gives it to you, because we're not in a defined trading trend mode market. With that said, I talked way too long. I hope you enjoyed the video. At least you got to, well, she's gone now. She got bored with Papicita, and we'll be back for more market analytics as the week progresses. Take care. Thank you.